Hello everyone, good morning and welcome to this educational presentation where today I want to discuss something you can start doing today to become a more consistent trader. This is something that I've been applying to my personal trading for over 4 decades now, and I believe it's the cornerstone that has sustained me going on that amount of time. This is something I learned when I first started trading on the floor of the Pacific Stock Exchange, and it really turned my trading around. Now, first of all, I don't want you to think that it's a 100% indicator or a foolproof system that never fails, because nothing works like that. But it really has helped me to become a more consistent trader. And you'll see how simple it is to apply, but how powerful it is at the same time. Now, for example, let's look at this chart. This is the way most traders make their trading decisions, and this is why a lot of traders fail. Looking at this chart here in UI, this older chart, someone would look and say, well, we were making higher highs and higher lows. So at this point, we were in an uptrend. So obviously, I don't want to go against the trend. I want to be a buyer. But then we hit some resistance. Maybe the institutions come in, the banks are big sellers. So you don't want to be buying anymore because unless you break out, that's where you're going to be a buyer. But then you took that candlestick course and you said, wait a minute, we have a bearish engulfing pattern right here. And then we have another one right here. So those are two very bearish signs. This is the market telling me it wants to go lower. So for all intents and purposes, I'm not going to wait to sit around to buy this. If it breaks out, I actually want to be an active seller because we're in a downtrend. We're making lower highs and lower lows. So you decide to say, if we have a little bounce or on the next trading day, you're going to sell. Your analysis basically is the market is going lower. So you wait for maybe your strategy to generate something or just to have a feel, and you decide to sell. And this happens, okay? Does this look familiar to anybody? This is the way my trading used to be some 43 years ago, basing my decisions off of the same things I just shared with you. And many of you, I'm sure, are making your own decisions based off the same analysis. So why isn't it working? Well, I'm going to share with you one simple technique today that could have kept you out of trouble here and not had you selling and had you on the right side of the market. Because being consistently out of sync with the market is at the root of all your losses. Think of it. The only reason you're losing is because you sell and the market goes up, or you buy and the market goes down. What that means is you're out of sync with the market. So what we want to do is put you in sync with the market, and you will increase your odds for consistency substantially more. That's what we're going to be talking about. So what if there were a tool that was automatically designed to put you in sync with the market? Well, there is. And I'll share it with you today in today's educational presentation, and you're going to see how simple it is to apply this tool on our new platform, the PTS Primo charting platform. I developed this with Pro Trader Strategies. It's an educational platform that actually teaches you the importance of being in sync with the market and helps you to become in sync with the market. Excuse me. So welcome. This promises to be a great educational class today. My name is Stephen Primo. If you're new to my educational webinars, we give this on a weekly basis with one goal in mind, and that's simply to educate traders. We feel that the reason why most traders fail is because you're really basing your decisions off of faulty assumptions. And don't worry, we've all been taught the same things. I was taught the same things some 4 decades ago, and they didn't work for me then, and they're not about to start working now. So over 4 decades, and what my mentors have taught me, I really teach and try to instill all the same concepts and techniques and strategies into our students. And we have students around the world in over 115 countries and in every state in the United States. So we've had great testimonials about our methods and our techniques. They're extremely simple, but extremely powerful. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 14 years. 9 of those years I was a specialist, so that's where we get the name specialist trading. A specialist is simply someone who made markets. He specialized in making markets. Now, I made markets in about 60 stocks, IBM, US Air, Waste Management, to name a few. I traded and made markets during the crash of 1987 and the bull market that followed. So in my 4 decades plus of trading, I've seen and traded just about every market environment, straight up, straight down. And I've traded just about every system, every technique, every new method you can think of. If you're trading something that is brand new, that no one has ever thought before, you feel that you have a brand new technique or system that you spent thousands of dollars worth for, don't worry, it's been around, trust me. It's just been rebranded or just edited and altered just a little bit. But most of the things, I know what works in terms of consistency, and I know what doesn't. So why waste your time and especially your hard-earned money searching for that holy grail when it's right here in front of you? It's simply sound fundamental education. That's what we're trying to instill in everyone around the world so that you can, for the first time, make your own trading decisions. All right, now with that said, before we begin today, we are required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results and sharing with you this technique on how to get in sync with the market. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. Now, as we do every week, I'd like to take this time to invite we have a lot of new attendees today. So if you haven't done so already, please feel free to follow us on Twitter. There's our handle right there. I would suggest copying that down. I post different educational information on a daily basis. Signals our strategies have generated to little bits of financial wisdom. There's lots of great free education, so feel free to follow us on Twitter. Excuse me. Now, as I stated in the opening statements, we're a little bit different from other webinars you may have attended in the past in that our only goal is simply to educate you. We are first and foremost an educational company. So what does this mean? Well, it means that we don't keep statistics or numbers. We don't tell you how to trade. We don't have a nightly service that has signals on it and tells you what to buy or sell. We don't have a chat room or a trading room that we advise you what we're doing during the day and show you trades we're doing. I mean, that is really counterproductive. In my opinion, that's one of the reasons what leads to most traders' failure is because that's a crutch. You're taking yourself out of the game. When you rely on someone or something else to make your decisions, what you're basically saying to the market is, I don't know what to do. I don't have enough experience. I'm not knowledgeable enough. So why don't you do this for me? Why don't this so-called guru do it for me? Why don't I just go to this chat room and have you tell me what to buy or sell? And that couldn't be, further from the truth from being a consistent trader. In fact, in my opinion, that's a recipe for disaster and why most traders fail. So what we want to do, my goal is not to force feed you signals. It's not to tell you what to buy or what to sell, what time frame to trade. Those are things you have to decide. My goal is simply to teach you how to trade with the specialist edge. This is the edge that was taught to me some 43 years ago when I first started trading and what I feel has sustained me now for that amount of time. That's what I want to do with all of you. Not just to give you a couple of good years or maybe a couple of good months of trading, but a couple of decades, 2, 3, 4, 5 decades so that you can sustain yourself for that time, okay? Now, since this is an educational presentation, I want you to ask me as many questions as possible, but we have a good crowd here today. I don't want to take all of your Saturday morning, so if we stop for every slide to ask questions the way some other webinars do, we'll be here too long. So if you have a question, please wait till the end of today's class. I promise I'll get to each and every one of them. This won't be a very long one, only about 30 minutes or so. So at the end of that time period, please, if you have a question, please ask it then, okay? The only question I will answer is the most common, and that is this being recorded? Yes, it is. We will send each and every one of you a link to this recording. So if you have technical issues, if you can't see or hear the screen properly, we will provide you with a link, okay? With that said, let's begin, and I want to begin with a stat. Now, I'm sure a lot of you are saying, wait a minute, I just heard you say that you weren't into statistics, that you didn't believe in statistics, and you're starting out the presentation with a stat? That's true. I really am not a big fan of statistics. Why? Well, because a long time ago when I first started teaching, I actually taught some statistics for certain strategies, and I even traded them for certain companies. And these statistics going back 10, 20 years were phenomenal. You know, small drawdowns, the percentage of wins was amazing. And they had minimal losses going back 20 years. But guess what? When the market changed environment in 2008, all of these systems fell out of bed. They all lost money. In fact, some of them just blew up and lost everything. So that's why I really don't believe and I'm not a big fan in statistics, because that's the main reason why we are required by law to share with you a disclaimer, because most statistics don't work. Ultimately, they will break down when the market changes its environment. But I want to start out with a statistic today, going against the grain, because this statistic, since I've been trading, has been correct roughly about 80% of the time. And that's a phenomenal edge to have. 80% of the time, this statistic works. And this is the edge I want to talk with you today. I know you might think this is kind of cynical, but this is the statistic. 80% of all traders will lose money. That doesn't change. That's been the same ever since I started trading some 43 years ago. And the facts also state that 15% of all traders will just break even. Ultimately, this means that only 5% of all traders are consistently profitable. 5%. Now imagine, we've almost got that amount of traders here today, but there's roughly about 100 people listening today. That means that 80 of you will lose. And basically, when we say you'll lose money, it doesn't mean you'll have a bad couple of weeks or a bad month. Basically means you'll give away all of your money. 15 of you will just break even. Now that's okay, but you put in a lot of hard work and time and energy just to basically tread water, and you're not going to see anything for all your hard work. And only 5 of you listening today out of 100 will be consistently profitable. Now, if you see what that looks like on a pie chart, that large portion in red designates the percentage of traders that will be losers. That blue portion is the traders that will break even, and that small green sliver represents the traders who will be consistently profitable. Okay, this is the only statistic I really believe in because it never changes. Now, you have to ask yourself, how is it possible that the majority of all trading profits are captured by such a small percentage of traders? Now, I really believe, after trading for so long, almost going on 4.5 decades now, that there is a never-ending supply of profits to be made on a daily basis. All you have to do is reach out and take it. The market is like your best friend. It's just saying it's like a big pie in the sky, asking you to take as many profits as you want. So why is it that such a small amount of traders are able to capture it and the rest of us are really having difficulty? Well, it's really simple, because these traders, whether they know it or not, they know the importance of being in sync with the market. This is what will make you a consistent trader. Now, you notice I didn't say this is what will make you a 100% winning trader, or I never said that this will have you never have any losses. What I'm saying is that it will make you tremendously consistent. And consistency is basically 2 steps forward, 1 step back. Sure, you will have losses from time to time, but you'll have the confidence in knowing that you're in sync and that you're consistent with the markets, and you're able to recoup those losses. This is what you want to be able to do as a trader. You know, so many traders are searching for that holy grail, myself included. When I first started, I wanted that method or that system that was going to make me a home run, that would make me a millionaire in a couple of weeks, and that I could retire and buy that house. And it really doesn't exist. If it does exist, sure, I've known traders that have hit home runs, made relatively large amounts of money, even millions of dollars in a short time. But all those traders have given it back. So what type of method or system is reliable if it gives it all back? That's not really what a trader is. That's more of a gambling mentality. What you want to do is hold on to it and be consistent, so that ultimately it's more about the journey. You could be trading 30, 40, 50 years instead of a couple of months and then give it all back. So let's go back and look at that opening chart I shared with you, okay? And remember, you use the standard conventional wisdom to analyze this. You said, okay, higher highs, higher lows, now lower highs, lower lows. You have some resistance from the institutions. You also have bearish engulfing patterns. These are all the standard things we've all been taught that are supposed to give us a clue as to what the market wants to do, right? So you decided to sell, and then this happens, okay? So why didn't it work? Well, because there's no consistency in those things. We don't teach any of those things. We don't teach about support and resistance. I don't teach anything about what the institutions are doing, or moving average crossovers, or tons and tons of indicators, or even fundamental news. I haven't looked at news like earnings or jobless claims in 4 decades, and I'm still here. So obviously I'm a sign that you really don't need those things if you don't want them. So what are we actually listening to then? We're listening to the chart right in front of us, because that tells us everything we need to know. So what if this tool, or I should say, what is that tool that is designed to automatically put you in sync with the market? It's our buy-sell line. The only place you'll ever find this in the features and ways in which we display it is at Pro Trader Strategies and Specialist Trading on our platform. Now, before you go out and say, oh, this is great, now I've got to buy some $10,000 indicator. No, in fact, you have access to the buy-sell line right now, because it's simply the 50-period simple moving average. That's all it is, but most people use it incorrectly. You're looking for a crossover, you're looking for the direction. Here's the way to properly use this tool, the buy-sell line, because it tells you whether you should be a buyer or a seller. That's its only function. In order to use it correctly, all you have to do is ask yourself this question before each trade, and that is, where is price in relation to the buy-sell line. In fact, I would suggest that you write that down and put it on a little Post-it or something near to you so that you don't forget. I don't care what strategy you're trading. I don't care what system. I don't care if it's something based on fundamental news or something based on the full moon. I don't really care. You will have a higher level of consistency if you ask yourself, where is price in relation to the buy-sell line before you pull the trigger? Because once you ask yourself that question, you're only going to come up with two possible scenarios. If price is above, then you will only have a buyer's bias. This means that whatever strategy you're trading, if it's above the 50-period moving average line, and your strategy generates a sell signal, don't take it. Why? Because the odds are against you that it'll be working out for you. Now, it doesn't mean it won't work out. Sure, you will have some that will work out, and you'll say, gosh, this Steve Primo guy doesn't know what he's talking about. But remember, it's about consistency. Over time, we want you to be consistent. It's a numbers game. 2 steps forward, 1 step back. Now, if price is below, then you will only have a seller's bias. You will never buy below the buy-sell line. Why? Because you will increase your odds for consistency with using this simple rule. So let's look at this chart one more time, all right? How come we lost so much money? We were told to always look at, conventional wisdom, higher highs, higher lows, support and resistance, candlesticks, and it didn't work. Well, it's because you didn't listen to the market. You were listening to outside sources that hold no levels of consistency. Remember, I've been trading for 4.5 decades now, and I've traded these things that you probably base your decisions off some 4.5 decades ago. They didn't work then, so why would you use them now? They're not about to start working now. But this has worked, and once again, this is, I believe, the cornerstone to being able to sustain me by using this simple technique. Now, on our platform, you see in our upper green strategy tab, we have all our strategies and all our techniques and method. Right here to the far left, we designed it to make it simple. This is the first thing you should do with any method, any technique, is go to the far left-hand corner, click on the buy-sell line, right here. And, well, before we do, we see that we lost money. Now we click it on. You're going to see this drop-down menu, and we have 4 different ways, 4 different functions of viewing the buy-sell line. Let's click on the simplest, the easiest, which is the 50-period simple moving average. And here it is. Now ask yourself, where was price in relation to the buy-sell line before you sold? It was above. Are we going to be selling above the buy-sell line? No, because the odds are it's going to continue going up. And look, you see how after just applying this simple basic rule, you would not have lost money. Remember, always ask yourself before you pull the trigger, before you take any signal, I don't care if it's one of mine or yours or somebody else's, where is price in relation to the buy-sell line? If price is above the way it is here, you should not be selling. How about this example in PINS, all right? Well, stock has been going down, but look what we have here. We have some support. You know, you took that $10,000 class, that online class about support and resistance and how about all the institutions are buying here. And you say, Steve, the institutions are the big money. They never lose, right? They're always making tons of money. So I want to follow them. So you say to yourself, this is some major support. And then on top of that, you decide to buy. Okay? Sound familiar, right? What happened? You didn't apply the first rule, which is the buy-sell line. Click it on. In the drop-down menu, click on 50-period moving average. Now you ask yourself, where was price in relation to the buy-sell line before you pulled the trigger? Well, price was obviously below. So why would you want to buy anything based on faulty assumptions like support and resistance, what the institutions are doing? I traded with the institutions some 4 decades ago when I was on the floor of the stock exchange. And trust me, we had a running gag going on all the time, all the specialists. We used to say whenever an institution gave us an order, we would try to do the opposite because they were wrong 9 out of 10 times. So why would you on earth base your signals off of what they're doing? So the easiest thing in the world is to apply a 50-period moving average. Now, if price is below, are you going to be a buyer? No. So you would have saved yourself this money. Now, had you looked for sell signals along the way, you would have had some very nice trades here. Now, please remember, this is not a system. It's not a trading strategy. It's only designed to tell you what side of the market to be on, to tell you what bias you should have. Should you have a buyer's bias or a seller's bias? Once you determine whether you should be a buyer or seller, then you have to add some structure to it, like a strategy. But simply because price is above or below, it doesn't mean you just go buy at the market or sell at the market. This is not a trading system or a strategy. It's simply designed to get you in sync with the overall trend. All right, so that's the question you always want to ask yourself. Where is price in relation to the buy-sell line? Let's look at a rule of thumb here, because there are certain things that come into play that you have to learn, because you have to look for at least 3 to 5 bars to close either above or below the buy-sell line before an overall trend is established. So in other words, a lot of our students will say, Steve, this is amazing. I love this. And so they'll send me a lot of their homework and they'll say, okay, well, this is obviously in an overall uptrend, and it'll have 1 bar closing above the buy-sell line. And I'll say, that's not enough. With that, you need 3 to 5 bars closing above. And remember, just because you have 3 to 5 bars closing above doesn't mean you buy at the market. Then you have to add some structure. But 1 or 2 bars above or below does not determine the overall trend. For example, let's look at this chart here in big. This was just a couple of months ago. Now we were above the 50, and now we started to trade below it. But someone said, well, Steve, you know, I like this stock. The earnings are supposed to be really good. That chat room I go to says they love this stock. It's a great buy. And so, you know, it's really oversold off this sell-off. I want to be a buyer. Say, well, listen. Right now, you have a total of 5 closes below. That has just confirmed that the trend is down. So I personally wouldn't buy this yet until you get 3 to 5 closes above. And that would have been some smart advice, because look what happened. It dropped 15 points. So if you would have used this simple technique, you would have stayed out of all this trouble and then waited for it in April, coming into May last month, to have 5 consecutive closes above, which it did right here in mid to end of April. Now, at this point, I would say, rather than buying it right here based on these faulty assumptions, now you have the okay if you're interested in buying it. But simply because it's above does not mean it's going to go up. You have to add some structure. So let's say your strategy, let's say based off of earnings, whatever you want, generated a buy signal. Well, that would have been okay. I would have been in full approval of that. And then ultimately, the stock jumped 20 points in the next month. You see how waiting for 5 bars to close above and 5 to close below gave you the confirmation. Now, it's not guaranteed. It's a rule of thumb, but it can really help you along the way. Now, here's another example and what we mean by consistency. Because remember, consistency does not mean that every trade or every setup is a winner. Consistency means that you will have some losses or some trades that really don't work out from time to time. A consistent method is one that's able to recoup those. For example, right here, once we had 5 closes above, let's say you decide to be a buyer and your strategy is based on breakouts. And on this breakout right here, you decide to buy. And then look what happens. It goes up for maybe 3 or 4 days, and then right back down here, you have a loss. Let's say you get stopped out with a loss, okay? It's still above the 50, but you just don't like the way it's acting. Say, hey, Steve, this doesn't work too well. Gosh, you know, I bought it, and how come I didn't make money? Well, they don't all work out. But look at right here. Later on, we have 1, 2, 3, 4, 5, 6, 7, 8, 9 bars closing below the 50. All right? Now, what is the market telling you? Not some guy in a chat room, not some guy on TV, not some institution. What is the market telling you? Even though it's been going sideways for a couple of weeks, it's saying it wants to go lower. And guess what? The stock fell 8 points in the next week. So you see how powerful this tool is. It's very consistent. Sure, you may have a trade or so where it doesn't work out well for you, but if you were thinking about getting back in because you thought it was going to bounce up, this would have saved you from losing some more money. This is what we mean by consistency. 2 steps forward, 1 step back. Now, I'm sure a lot of you are saying, okay, Steve, I thought you were going to give me some really good indicator or something really powerful. How important is this really? I mean, can this really help me? This is a little bit too simple for me. I thought I was going to hear something advanced. You've been trading for 43 years. This is all you have to show me? All right, if you're not convinced yet, let's go back and look at this chart of the Dow, okay? This is a chart of the Dow, how we made up new highs and we kind of pulled back a little bit. But the only thing different about this chart is that it's not current. In fact, it's a chart of October 1987. I know many of you were not around then, but I was trading on the floor. Now, it doesn't really look like much happening here. There's really no clue as to what the market wants to do. For all we know, we've been in an uptrend. We've just pulled back, and it looks like we're going to go back up again. But what's our first rule? We apply the 50-period moving average because we want the market to tell us and give us a clue what it wants to do. Once we did that, we can see here that coming into fall of 1987, the market was fine. But at this point, we started to have some ups and downs here. All right, we had a couple of closes below, then we closed back up, then we had a lot of closes below, then we went back up, and then some more closes below. So this is the market telling you, at the very least, there's a lot of indecision going on here with a bias to the downside. It's not clear cut that we're going straight down, but the bias is to the downside. So at this point, at the beginning of October of 1987, if you had the simple tool, you would have said, well, hey, listen, I think, maybe I'll sell a little of my positions, or maybe I was thinking about getting long, maybe I'll just wait, or maybe I'll raise my stops, so if something does happen, at least I won't lose a lot. And that would have been very good advice, because we all know what happened in 87, and the 87 crash would have been comparable to a one-day market drop of 4,000 points today. Think of it, going down 4,000 in one day. Now, this is the crash right here. So you see, coming into that, we had already dropped comparably 4,000 to 5,000 prior to that. So you would have saved all of that, plus here was the crash of 1987. Let's look at a weekly chart of the spiders. Okay, that's the S&P ETF. Same thing, looks pretty good, but guess what? This is not current weekly chart. This is January 2008. Do you all remember 2008? The market was doing fine. It was well above the 50-period moving average, but at this point, it starts to have a little bit of indecision. We have closes below, 3 closes below, a couple of closes above, and then multiple closes below again. Once again, this is a warning coming from not me, not some guy on TV, not some institution. It's a warning coming from the market, the very thing you trade, telling you that you may want to take caution. And that would have been some sound advice, because we all know what happened in 2008. That was the beginning of the 2008 financial crisis. Don't you think this tool could have helped you then? If you're still speculative about this, and you still think, well, I'm not sure how powerful this is, don't you think it could have helped you? You could have, if you wanted to, by using this simple tool, stayed out of the entire bear market until it got back up above the 50-period moving average in 2009. Or how about this chart? All right, this is going back to October 2018, a couple of years ago. Same thing, we're doing fine until we have 3 closes below. Now remember, 3 to 5 is what you need. I would rather have more than 3, but 3 right here is an early warning, and the Dow Jones fell 4,600 points in the next 3 months. So do you see how this is a tremendous tool, how it can help you either determining the market or the specific stock, future, currency pair you're trading? Remember, this is not just privy to stocks. I use this on 5-minute charts of the E-mini futures. I use this on currency pair trading. You can use it on Bitcoin, commodities. It can be applied to a monthly chart. It can be applied to daily, weekly, tick charts. It makes no difference. So try this. In fact, you can start experimenting with this right now, okay? Now, remember, go back and research your last 10 to 20 trades, all right? Doesn't matter what it's based off. Could be news, could be based off indicators. I don't care. But I can almost guarantee you that your losses were due to the fact that you were out of sync with the buy-sell line. I'm sure once you do a little research on your last amount of trades here, you'll see how powerful this tool really is. Now, I want to do something that I don't really do a lot of the times. We're going to look at some live charts, because being consistently out of sync with the market is at the root of all your losses. So I want to show you how this could be applied to charts that are current, up to date. So as we take one last look at our disclaimer here, remember, I'm going to show you some performance results using the buy-sell line, but all these examples are strictly for educational purposes. There's no guarantee that any of these results will be repeated in the future, okay? So let's scroll over to our PTS Primo charting platform, and let's look at this chart here, MGI, okay? Now, in the beginning of this chart, it was kind of going lower to sideways, and then all of a sudden it shot up. It's a very inexpensive stock, but I wanted to show you this just to make sure that it makes no difference what the price is. It makes no difference what time frame, that it can be applied to anything, okay? So how could the tool have helped us? Well, first thing we want to do on our platform, go to the buy-sell line, and I want to show you a little more advanced way of using it. Now, here's the most typical way. It's our 50-period moving average, but we've applied and updated our charting platform with many ways to help you. Let's look at our fluid, our most popular way of looking at the 50-period moving average. Because what this is our 50-period moving average, but everything below is colored reddish orange, everything above is colored blue. So now you have it basically color coded for you. We've taken the hard work. If you see that price has a blue background, you know that means you have a buyer's bias, and if a reddish orange background, you know you have a seller's bias. So following this stock, there was no reason to be interested in this up until right around here. Do you see how we had 1, 2, 3, 4, 5, closes, multiple closes right here about 1 and 1.65, 1.70. Okay, and look at the stock. It shot up basically about 200%. Now, this is what we mean, though, by saying this is not a system, it's not a strategy. What you have to do is, apply some structure in the form of a strategy, because all this is doing is telling you whether you should be a buyer or a seller. In other words, you didn't want to be a buyer back here because you would have lost money. And even when it was starting to rise, you still didn't want to be a buyer because there was no confirmation. It was right here at this point that the stock told you, not me, not some earnings report, the stock told you it wanted to go higher. Now look at this. How did it know that it was going to gap up like that? Well, we didn't know, but the stock knew. It told us. So that's your job as a trader. It's not to discern what the earnings are. It's not to figure out what the CEO, what the direction of the company is. It's not to figure out what some other institutions are doing. That's not your job. Don't worry about those things. Why overcomplicate your trading? Your job as a trader is simply to be in sync with the market. It's to find out what the market wants to do and then jump on board. It's never to try and pick a top or a bottom. That's silly. That's like that's a gambling mentality. That's like trying to stop or catch a falling knife. Why would you trade like that? Why not just go with it? If the train is leaving the station in a certain direction, jump on board the train. Now, as I stated, you have to add some structure. So let's just look at one of our strategies here. Strategy 3A, which is good at capturing some big momentum. We'll capture signal arrows. And you see here how once we were below, how it captured a really nice sell signal. Now this most likely would have been a small loss, but then you would have gotten back in and made up that loss and some then. So do you see what we mean by consistency? Consistency means that you will have some losses from time to time, but a method that's able to recoup that and go even more is a consistent method. So you see how simple it is. Once you know what side to be on, you will automatically increase your odds for consistency. Let's look at another one. Let's look at NCLH on our platform. Let's click it on. And we see here that this had kind of the same premise. We'll give it some more room here. We were originally above. And at this point right here, okay, when the stock was trading roughly about 55, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 closes, roughly about the same price, between 52 and 55. Now, someone here would say, well, Steve, this is building a base, okay? That chat room I went to says that it's very strong, that they've got some really major support, and I want to be buying. Trust me, I used to use that same rationale years ago, and it didn't work then. So why would I even care if it's building a base? Why would I care what the institutions are doing? Why would I care about this? All I want to be interested in is seeing and asking that question, where is price in relation to the buy-sell line? Well, price is below, okay? So I don't want to be a buyer at all. And that would have been some sound advice, because look at that, I would have missed all of this, all right? Now, it's seeming to firm up, but I'm still not going to be a buyer until right here. 1, 2, 3, 4, 5. Now I'm saying at $15, okay, this may be interesting. You know, I could have gotten into 55 and lost a lot of money. Now, this saved me, and now I'm thinking about getting in around 15, okay? So let's apply one of our strategies. This is an entry strategy, steps 1. Look at all these. Well, our first trade would have been most likely a small loss, but then look at all these sell signals. We would have recouped that tremendously. And then look at the buy signals here. So this is what we mean by consistent, being in sync with the overall trend. Let's look at another one here. Let's look at VISL. These are stocks that have basically been in the news lately or have been some very big mover stocks. Let's go back here, give it some room. Once again, do you see how we were below the 50-period moving average and the stock was just doing nothing? This is basically a 20-cent stock, okay? Because a lot of these stocks have been moving tremendously. They've been in the news. So I wanted to show you some active stocks as of late. Now, this is going back March into April. And then right here, what do we have? 1, 2, 3, 4, 5 closes above. coming into May. We're still in April. Now, obviously, it does not mean to simply buy at the market. Let's say you had bought, well, you would have been sitting for the next month basically doing nothing here, okay? So we have to add structure. We know that we want to be a buyer, but you have to add some structure in the form of a strategy. Let's just use one of our short-term strategies, strategy 9. Not a bad little signal here, huh? Right here, roughly at about 25 cents, you could have gone long. You would have waited about 2 or 3 weeks, but stock went up basically, gosh, right about 400%, traded around 150 almost. Did we know the stock would go that high? Absolutely not. Did we know why it went up that high? No, who cares? I mean, why would you care? Who cares why it goes up that high? I know a lot of students always say, gosh, Steve, why did it go up? And I always say, I don't know. They would always ask me, well, aren't you interested in the reason? No. I mean, why would I care what the reason is? I'm just listening to the stock. You know, there's always going to be a reason, but I'm not trading the reason. I'm trading with the stock. So, you know, if you want to figure out why it went up, you can do that, but there's absolutely no reason to do that. I mean, that's not our job to figure out. That just will overcomplicate your trading once you start going down that path. Your only job is to be in sync with the market and then jump on board, okay? Here's another stock that's been in the news as of late. Let me just get rid of that strategy. Hertz, okay? Hertz just filed for bankruptcy. It's too bad. This company been around a long time. And guess what? The stock was above the 50-period moving average. And right here, we had 3 to 5 closes when the stock was trading at 12. So I'm not saying you should be buying or shorting this stock, but let's say you had this in your portfolio. You know, Hertz has been around for a long time. You could use this simple tool to tell you that, well, listen, I should be out of this. Maybe, you know, not that I'm going to trade it, but maybe I shouldn't be long this anymore. So had you purchased the stock, say around 20, well, you would have taken a loss, but at least you got out maybe about 13 or 14. You lost about 7 points. That would have been a lot better than waiting for it to go down to $1 or $2 or $3, okay? Now it's starting to hug and think about getting above this, but remember, we need 3 to 5 closes above. So, you know, until that happens, I wouldn't even consider doing any of this, but it's up to you. This is just my opinion. We in no way are connected or affiliated with brokers or any type of advice. We're just sharing with you knowledge, and you have to make your own trading decisions. We don't suggest or advise anyone on how to trade. Remember, our goal is to educate you so that you can make your trading decisions. It's not our goal to advise or suggest anything. Here's another example. This stock really has been going down. Tiffany. Okay, do you see how, I mean, once this crossed below, let's go back a little further. Yeah, once it crossed below right here, 1, 2, 3, 4, 5, the stock was trading at roughly 130. It went all the way down to 104, 105. Came all the way back up, and someone said, well, Steve, gosh, I mean, how come I didn't buy here when it bounced like that? Well, if you've done that, sure, maybe you've made about 5 points, but you've been sitting on it the whole time, and look what happened after that, okay? And if you wanted to add a strategy, strategy number 4, look at these sell signals before the stock dropped. Now, it had a big gap on Friday to the upside, but remember, the buy-sell line still has a seller's bias until this has 3 to 5 closes above, okay? Let's look at another one here, RH. Okay, RH, once again, was below the 50-period moving average, and right here at the end of April, beginning of May, 1, 2, 3, 4, 5 closes. Now, if you weren't using this tool, you'd say to yourself, well, you know, we've gone up, and it looks like we're going to come right back down again. We did the same thing here, and nothing really happened. We did the same thing here, and it went down. Why is this going to go up any higher? Well, because for the first time, you have 5 closes above. So at this point, first week in May, you would say to yourself, well, listen, if I was thinking of buying RH, now's the time to become a buyer. Am I going to jump in and buy at the market? No, we need some structure. So let's apply some structure in the form of one of our most consistent pullback methods. This is strategy number 1. All right, now we had a couple of sells right here as it was going up, and these obviously were losers. All right, you would have had a small loss, most likely been stopped out about right here. But this is what we mean by consistency. Look at what happened right here. Right at the very bottom, you could have purchased this roughly about 150. 140, 150. I'm not saying you would have purchased the stock. Maybe you would have bought options. It's up to you. Remember, it's your choice, not ours. And do you think you would have been able to make up that loss that you had when you shorted it? Stock went from 150 up, roughly up to 260, 110 points. Not a bad little trade in about 2 or 3 weeks, right? This is what we mean by the power of the buy-sell line. It's not designed to give you 100% winning trades. It's not designed to tell you buy at the market, sell at the market. It's simply designed to tell you and be in sync with the market. And this is such a powerful tool. I've often said, if I were stranded on a desert island and I could only use one of the tools that I've, gained in my 43 years of trading, it would be this, because this has helped me so much more than anything else. Okay, let's go back to the presentation again. Remember, all examples I just shared with you were strictly for educational purposes only. So let's recap before we go into question and answer portion. Remember, apply the buy-sell line. The buy-sell line is simply the 50-period simple moving average. And always, before you apply it, before you pull the trigger on any trade, ask yourself, where is price in relation to the buy-sell line? If you get a buy signal with your strategy, and then you apply the buy-sell line, and that buy signal is below the buy-sell line, well, the buy-sell line is telling you not to take it. If you get a sell signal, regardless of what it's based on, and then you see that it is above the 50-period moving average, the buy-sell line is telling you you will have more consistency if you are in sync with this simple rule by being below to go short. Okay, we have a great discount for all of you attending today. It's going to help you be in sync with the trend and even give you more edges to be in sync with the trend. This is our bootcamp course. It's our trend trading special where we have more trend trading instruction, instant course access. We talk more about entries, exits, and stops. We didn't talk about that today. We have aggressive and conservative ways to be in sync with the trend. You get the complete course rules. But we're not going to stop there because remember, when we talk about the trend, we're only telling you whether you should be a buyer or a seller. You still have to add some structure in the form of a strategy. Well, guess what? We're also going to throw in one of the strategies you saw me sharing with you today on the examples. That's strategy number 1. It's one of our most consistent pullback methods. A pullback is when you look for the overall trend to be up and you look for a sell-off to buy at lower lows, the way we did, I believe, in RH. And then a pullback sell is when you look for an overall downtrend where below the 50-period moving, you look for a bounce, all right? You're going to get all the complete strategy number 1 rules. You're going to get the aggressive and conservative versions, and we're going to tell you exactly how you can apply it to any market, any time frame, and any direction. Let's look at this example. Here's an old example of this with the spiders. Now, someone looking at this would say, well, wait a minute, Steve, I don't want to buy this. Look at this downtrend. We have 1, 2, 3, 4, 5 lower closes, okay? And obviously, we're in a downtrend. We broke some support here. Looks like the market's going lower. I'm not going to be a buyer, but pullback strategy number 1 actually generated a buy signal at the very low. And the spiders went up 8 points. Now, 8 points doesn't seem like a lot, but that transferred over onto nearly 700 Dow Jones points. So this is a great, great strategy. You're going to get all the rules, including some extra bonuses we're throwing in. You're going to get 12 trend trading bonuses, okay? Our online bootcamp course, strategy number 1, the course and rules. You're also going to get our entries course, complete rules to different ways to enter, our exit course, and our stop placement course. So you can choose from all these different ways to enter, exit, and place your stops. You're also going to get our buy-sell line scanner. You can scan for nightly charts of stocks that are either above the 50 or below the 50. So you don't have to go and punch every stock up in the NASDAQ 100 or the S&P. You'll know which stocks are automatically above and which are below, okay? You also get our top-bottom 25% strength scanner. This is a great pattern recognition tool that tells you the short-term trend, okay? You'll get our strategy number 1 scanner. So you can scan for strategy setups, okay? So you can have the strategy and on a nightly basis scan for which are the best setups for the next day. So you'll know, rather than going through hundreds of charts, what are the setups for the next day, okay? You'll get our multi-scanners. You can scan for multiple different edges and techniques along with the strategies. Auto-click smart chart entries exit tool. This is something we have only on our platform where you auto-click on an arrow and it tells you where to enter, where to exit. You also get the add-on for strategy 1 for TradeStation. Let's say you are a TradeStation member or use Metastock, MT4, Sierra Charts, NinjaTrader. You'll get the add-on. But here's the most important thing. you're going to get 6 months of our platform. Okay, now this is close to a $900 value. You're going to get 6 months of our platform, and it comes with all these extras here. Okay, our pattern recognition, our proprietary exit levels, our scanners, our strength of trend tool. This is another tool on our platform that gives you an idea of when you're running out of steam in a certain trend. These are all standard with our platform. You're going to get all of these for 6 months. Now, 6 months, as we said, would normally cost you close to $900. It's thrown in absolutely free. So these are tremendous, tremendous advantages, along with all the courses, along with all the boot camps, all the information. Let's break it down. Our Saturday morning discount. If you purchased all of this separately, our boot camp course, our 12 extra bonuses, the strategy number 1, if you also had 6 months of the platform, it would cost you close to $8,400, or actually over $8,400. We're discounting that today for 1 day only to $297. You're going to save over $8,100. Less than $300 you're getting over 4 decades of information and education. It's taken me 4 decades to accumulate all of these things and then to properly format it in a platform for you. You're going to get all this for less than $300. I can almost guarantee you that many of you in the last couple of months have probably lost more than $300 in commission costs alone. Well, guess what? For $300, less than $300, $297, you're getting a lifetime of information that can help you maneuver the markets and take your trading to the next level. So trust me, a year from today, you will have wished you became a member of these courses. Why waste that time? If a year from today, you're still where you are right now, struggling, frustrated that you're not seeing the type of results you want, you won't be able to come back and say, can I take advantage of that $297 deal? Because most likely it'll be over $8,000 again. Take advantage of this, invest in yourself, and contact Pro Trader Strategies. They're my sister site. I developed the platform with them. They're in charge of all the tech support and the discount prices. You can email them, but I would probably suggest calling them at 310-598-6677. They have trading consultants manning the phones right now. They would be more than happy to answer any question you have, okay? I'm going to leave all this information up here. If you want to go to the sign-up page online, we have just posted a link in the chat box. So all you have to do is go to the chat box and the Go to Webinar column on the far right, click it on, and you will be able to see that really clearly, and you'll be able to sign up online if you want. If you still have questions, if you're still interested, but after the presentation is concluded, just call Pro Trader Strategies, 310-598-6677. Now, I promised you I would take questions at the very end of this class. So if you have any, go to your Go to Webinar column, just type them in, and I will chat and try to answer them as best as I can. Someone's asking, can this be applied to Thinkorswim? Yes, you can. But with Thinkorswim, the way they're formatted and what they allow us to do, we can't actually use their platform. But what they've allowed is they said, listen, you can use our data feed. We'll give you our data feed for free. So if you're a Thinkorswim user, all you have to do is have a certain format, and we will do this all for you. The tech support does this for you. And we will give you a NinjaTrader platform where you will be able to see all the setups, all the up and down arrows, all the different buy, sell line features on there, on NinjaTrader. So it's really simple. But once again, as a member of this $297 course, you are going to get 6 months automatically of our platform. So I would suggest just contacting that and sticking with that, because that's really the best way. Everything is pre-formatted, all the indicators, all of the different formats. So it's all right there. It's one click away, okay? We have people as far away as India saying hello today. Thank you for attending. Someone's asking, can we view this on a 1-minute chart? Yes, we can. All you have to do is on our platform, contact Pro Trader Strategies, but in the data box, just change it from, we had it set for daily, just change it to 1 minute. You can do that anytime you load up a chart. You can use it for that. You can look at monthly charts, weekly charts. And remember, we have data. You'll also get access to data for Asian markets, Indian markets, Canadian markets, European markets, for Bitcoin, for currency pairs, for futures, for ETFs, for the S&P 500. So if you're interested in looking at a lot of data, we have it all there. It all comes with this. So it's really, really a great opportunity to take your trading to the next level, okay? Someone is saying, Steve, if I apply the buy-sell line on my chart, how can I get the fluid? Well, remember, that's only available on our PTS Primo charting platform. This is not something you can construct and edit on yours. They don't have it anywhere else other than our platform. That's why we devised it and developed it that way, to make trading simple. See, our whole goal is, we feel that the simpler trading can be for you, the more you will apply it and use it in your trading, and then you will become a more consistent trader. So we didn't want to say, okay, we have all these concepts. They're real hard to follow, but if you follow them, you'll be more consistent. Because that wouldn't make sense. You'd most likely stop following them and stop using them in a week or two. So we devised all these to make them extremely simple so that you could use them on a daily basis. We have 4 different ways to view the buy-sell line. We have a number of strategies and features. We have different short-term methods. We have ways to enter, exit, and place your stops. Lots of great free information. Someone is asking, what do I trade the most, ETF or for the S&P? If so, what time frame do you prefer? Thanks. Well, first of all, I don't like to really, tell people what or how I trade, because remember, traders will use that as a crutch, because every trader needs to find their own way. I remember when I was struggling, I would go up and ask my mentors, I say, listen, why don't you tell me exactly how you trade? Tell me your perfect time frame, your perfect market, and I'll just piggyback with you. I'll just do the same thing you do. And they gave me the same answer. They said, well, what happens when we leave? What happens if you don't feel comfortable with the way we're trading? You're not going to make money. And it's true. I've had students before, well, I've showed them, this was years ago, about 20 years ago, where I've showed them my method, and I taught them exactly what I do. And then all of a sudden, when I looked at their results, most of them lost money. And the reason was because everyone brings something different to the table. Some traders couldn't take that amount of risk. Other traders wanted to take more risk. Some traders wanted to trade 20 times a day. Other traders wanted to trade only once a week. So even if you're following someone who's 100% successful, there's no guarantee that you will. Now, having said that, I like to trade the E-mini S&P, the futures. Okay, that's maybe because my background is in short-term trading. And I'll change. I'll change from tick charts. I'll go to 5-minute to 15-minute charts. But basically, it's because of my lifestyle. I'm giving just about a class a day, every day of the week. I'm contacting students. I'm putting together webinars. And I don't have a lot of time for research the way I used to, and to holding positions overnight. So when I get a chance, I like to day trade. Now, that doesn't mean that anyone should. That doesn't mean that that's the way it's going to make you profitable. So what you want to do is find your own way. My preferred way is to trade the E-mini futures on a short-term time frame. Now, as I said earlier, I once taught the student who said, well, listen, teach me what you do. And so I taught them the exact same strategy, the time frame that I traded at that time, and they lost money. It wasn't years later that they found out that, you know what, I'm not a short-term trader. I like to swing trade. So that's why it didn't work for them. So I never like to, have students follow. That's why we don't have trading rooms, because they're crutches, and they will lead to you losing money, to that 80% group that loses money. So we want you to find your own way so that you can be consistent. In my opinion, that's the only way one becomes a consistent trader, by making your own decisions and by finding your own way. So, John, great question, but I just like to short-term trade the E-mini futures. That's basically and with the time when I have to trade, that's about the only thing I can trade, okay? Okay, it looks like we're just about out of time. I just want to say thanks for taking time out of your Saturday morning to join us. I hope that you gained a little information today. We always say that we want to leave you with some educational information. Even if you decide not to become a student of mine, at least we left you with something that you can research. And I'm sure if you go back and look at your last 10 or 20 trades, you'll say to yourself, wow, this really would have helped me. I think I will take advantage of that. But don't sit on this, next week or two. Don't say, you know what, I want to take advantage of that webinar that Steve gave 2 or 3 weeks ago, because it'll most likely be gone. Take advantage of it now. Go back and do the research. I'm sure in just about an hour or so, you'll see how this tool can really help you, and we'd like to help you even more. So as we close up right now and take one last look at our disclaimer, I just want to thank you so much for attending. I wish you all the best of success. Have a great weekend. I look forward to all of you becoming students of mine in the Trend Trader course. Thank you so much. Have a great weekend, and I'll see you next week. Bye-bye.